Shagi just gave example of Reliance. They are a captive jetty, fully private sector. But what they are doing basically is safeguarding their own investment, frankly. It is not doing a charity or anything else, because the whole thing will come to a stop, refinery won't get. So similarly, ports will take care. As a matter of fact, having worked in major ports are not insured against any risk. They don't take any insurance outside.
Correct. That's a big issue. We realize that.
So the point is, there is a law which says anything done in good faith cannot be a negligence, criminal negligence or a crime. Because of that, there is that kind of a protection available to those people who work in major ports. And because of that, probably the risk assessment part is neglected. Though there are setups for all that, but they are not as refined, as good as you can find elsewhere.
In PIPO, I mean, all assets are insured in terms of jetties, in terms of equipment, the backup, everything.
100% they are all insured.
Okay.
And there is a continuous risk assessment exercise on a monthly basis to see whether risks have increased, reduced or the same, and what regime we have to face it is in place or not on a very, very regular basis.
Sir, a word of caution to the major ports also, because Mr. Sinha doesn't have to worry about it now. But this is the same issue which came in UK. A ship actually ran aground, the pollution was caused, and the fund paid the money, and the claim was raised as a recourse action against the port, and the port said the same thing, that we are a government port and we are not bound. This is what the national law of the land is. So the fund went and it told to the government that, look, you are a party to this international convention. Now there is a conflict between the national law and international law. And when there is a conflict, as per the Vienna law treaties, the international law prevails. And the government had to pay out. I mean, the port didn't pay, the government had to pay. So one way or the other, the port was liable, even if it was a government port. So you cannot get covered under those kind of things. So it's important even for the government ports to get covered, get the insurance for whatever. And second problem with what we face with the port is that there is like we have DG shipping, there is no DG port. Such a policy move was made. Of course, we don't want over-regulation, but it is important to have a level playing field, because the ports, the non-major ports, are controlled by the state governments. And every state government, imagine if you're going to have their own laws and own safety and regulatory regime. Now the cargo is generated in the country, wherever it goes. It doesn't see the state. It finds its own way. And then they are competing against each other, and the regulatory regime is not uniform. This is going to create a lot of confusion.
So how do we, I mean, as investors, they would like to have a much more clear risk assessment of the situation, and if they really want to invest. So what do you think? I mean, there is a need for a comprehensive and a pan-Indian kind of thing, at least on the technical and the safety matters. Maybe from the commercial or from the licensing angle, the state governments can really monitor it, because probably state governments are not equipped to undertake some of the safety and navigational issues. And I don't know what Mr. Sinha, because he also...
No, I would like to say here that the basic responsibility must be taken by the lenders. Those financial institutions, those who make investment. Because their perspective is just not operation. They would like to safeguard their interest and get return on their investments. And they are outside. They are not actually operating. Sometime in operations, people may neglect certain things. But it's the lenders whose money, when they give every time, they release in installments, typically quarterly.
Okay.
So I would put that kind of a responsibility on them, because many of things may not be covered in so many words in law. Like risk assessment, I don't think there is any single clause stating clearly risk assessment has to be made in each port and measures are to be taken. Though in different clauses, different kind of measures are to be taken to improve safety. So that will be one. Or equity holders in a private port, because that kind of a discipline I would expect the investors, the financial institutions to bring it. Government has a setup where law itself gives certain immunity to people working in the government ports. Anything done in good faith in government protects the person. Now that is not available to the private ports. So that discipline or the environment being different, it is for them also to take care. Let's not depend on government for, I would say, on this, because the details of safety also, the definition of safety and risk also keeps changing from time to time. Government regulation will always be behind the requirements. So therefore, it should be more responsibility of private domain directly.
Mr. Kaushik, I think you've been funding a lot of shipping and looking at ports and other areas also. And he's from State Bank of India. So what do you have to say on these? I mean, can lenders take responsibility
point
of?
of view to what Mr. Sinha is saying, that if bankers and financiers and equity partners start into the operational matters from the regulatory point of view, so the companies would not like our people, our boys to be trampling into their offices and asking for this paper and that paper. Basically, we are into the business of money. We are not into business of ports or aviation or shipping.
No, it's not
So
operational.
the thing is, that when we do financing, we do insist on all these regulatory clearances and all. But on a monthly, on a regular basis, or a quarterly or monthly basis, it will become too much of an operational issue, and companies may not like it also.
Maybe we have, like we have the classification societies for the shipping sector,
Right.
who do the regulatory inspection of the ship and they certify the ships. And then the investors have this comfort that the ship is now certified. And the classification societies, they have their own ratings, and their own credibility. And based on that, it gives the comfort to the investor and go and invest in a ship. Maybe some kind of similar regime, which is common to be hands-off. And these people do on behalf of the government, and they sort of see that the ports are all right.
So some bottoms-up initiative from the industry need to come,
Yeah.
which will probably, it's a self-regulating mechanism for the.
Self-regulation is better than.
See, internationally it is done the way I just now explained. Internationally, the investors, the major investors, including the lenders, take care of this. In India also, this culture is coming. Okay, I have a major exposure on funds, and their lenders, engineers keep asking me, see these things before releasing the next installments. It's already there. Not that I am not doing, but they are asking for this. What is what? And I think that's far better rather than creating an institution, because too much of bureaucracy in commercial working and any commercial enterprise is no good. Now, classification society is something in shipping which has a very long standing, and therefore there is certain set culture and all that, and probably being an international business, that becomes essential because ships go from one end to other of the globe. But to bring another agency to do this kind of a work in a port will create, according to me, its own bureaucracy and red tape. So it's better to do self-regulation.
Yeah, that's very interesting, because to summarize the sports sector, what we have seen is there's a huge opportunity in terms of there are close to probably 35 ports. There are 12 major ports and probably another 24 federal state ports which are coming up in different locations. These have large externalities in terms of CFS, SEZs, connectivity in terms of rail. These assets are really high-priced assets, and there is a huge investment coming in. But of course, there is a dichotomy between greenfield and the terminals in the major ports which are there. As explained from a private equity perspective, the maximum returns on the investment has come from the greenfield side, though it takes much longer to develop them, and but the kind of Mundra, for example, can have 40 berths eventually, and in terms of the scope and the growth is unlimited, while a terminal is more like a bond, which is giving you an assured return over a period of time. Of course, on the strength of that, you can develop more activities. Along with that, we have major concerns about the safety and the regulations part in the port sector, which we think is, as of now, not very clear, and the individuals, states, governments, at the central level and the state level are trying to bring in that regulatory regime. So that is an area of concern which probably financiers would have, both bankers as well as the equity investors. But
I have observation. Unlike shipping, I think for development of ports, we spoke of lack of business plan from the private ports. I think it has more to do with a very clear-cut government policy on ports.
True.
In shipping, perhaps a government policy may not be required, but as far as the port, it is definitely required. I recall my days of